This is Eric Muathe with Muathe.com. All is well. Let's take a look here, and we're going to be taking a look at how we can use the RSI to identify turnaround situations or potential turnaround situations in various instruments. We can see the market right now trading at the highs for the session for the day. I'll come back to that in a minute or so. Let's take a quick look at the cryptos. The reason being that I want to take a look at an intraday look at this crypto, LIKE.USD. And we're going to be taking a look at this from a swing trade perspective based on the RSI only. All right, let's take a look here. Again, this is purely from an educational standpoint. Let's begin with good examples here. So we can see a couple of reversals, or let me say a reversal area here for this instrument, YNDX. And based on my uniformity method, links are going to be in the description, we can see a simple, powerful example of a break here. Now you see what the instrument does is over time, it comes back to test that same RSI level. And this is the beauty of this method. This is rejected. And the key, this is why I call it the uniformity method. And this is the key. It is uniform action. This uniform action back to the line right here is the reason for a sell signal as far as a short-term swing trade is concerned. Now, of course, there are other things going on here. For example, we can see a price breakout. That in itself was a red flag. And we also see additional information from the fact that this resistance area happens to be around a critical RSI level of RSI 61.8. If it's your first time to hear this might sound strange because of the RSI use of Fibonacci level. But this level here is an area where we see lots of situations where things can turn around or actually pick up momentum. Now, a good selling point is always going to be confirmed by the RSI if your analysis is correct, because if we go backwards in time to test that sell area or the RSI 61.8 level, we actually see it confirms with another breakpoint. See this breakpoint right here? Based on the lows of the RSI there and this low right here, that was also another critical area in the sense that we broke down and we had a substantial slide at the beginning part of 2020. So this uniformity method is very powerful. It's been time tested. It works. Let's take a look at another example. Now this is a recent high flyer, NKLA. Huge move. We have a warm-up move here, coiling down. Ultimately, we have this explosive move. Now, this thing could be done. We don't know. But there was a reversal here around 50, lower 50s, now trading as low as 16 for the day, $16. So we can say huge reversal of this level. Was there a way for the RSI to tell us that this could be an area of a change? Of course, yes. Based on the same concept, we figure out where we broke down. Simple process here. We break down here off these highs. And essentially what we are doing is using the instrument itself to tell us how it responds. So there's a major break right there. Take that break, extend it out. We know the drill. And remember, I say the key in this method, the beauty of it is that these things come with uniform action. This is the key. This is the secret. And that's why I call the method uniformity. Links are going to be in the description. Because you can see that this is nothing we can even argue about. This is uniform action back to the same line, which I call this a uniformity line. And we see what happens to the stock right here. It is rejected. No questions. Very powerful method. And it is my own method, in a sense, not mine, but sharing it with you based on my own research over many, many years. Now you'll be amazed to see how these markets that look like they're different, trading in different environments, but the cryptos and the general market, they tend to reflect one another. It's been the case for many years. So we see here a crypto that is up about 20+%, up about 22% for the day. And I want to show you how it pretty much matches up with the general market. We can see here this is a 4-hourly chart. So a small time frame, 4 hourly. And we can see based on the uniformity concept. Now this is an educational video, so we want to see how this is going to play out. You're going to have the luxury of time because I'm recording this in real time. But there was a break here of this instrument off the level there, about 18 or so. So that's the price level right there. This level here. We take that info, draw our uniformity resistance line right here. Now you might notice that this intraday move brings the stock exactly where it is trading right now. So we know if this thing is rejected around here, keep in mind there was a rejection period here, which is off these highs from a swing trade perspective. That's a perfect timing. We have a double top here for these highs right there. So again, from an educational standpoint, I can guarantee you if this instrument is rejected at the RSI level right here, keep in mind this RSI level where the uniformity line is trading right now happens to be just under the 61.8 level. Now, as I pointed out, a good area to watch should most generally have confirmation. We can draw an RSI topside resistance line if we take the highs of the RSI, something like that. Maybe you might not be able to see it. Let me remove that. So what I'm going to draw is this topside resistance line potentially. We know that right now the instrument is above it, but remember, uniform action can suggest that in time this might roll over with uniform action. If it does, and if it confirms the uniformity resistance line, if those two things happen, this is a sell signal area, a swing trade area for the cryptos, for this instrument, and for the US markets generally. And I'll share with you a chart that I'm basing this off for the general market. Again, remember, purely educational. As I was pointing out, markets coming off the highs. We saw the Dow a couple minutes ago as I was recording. Dow was up about 320 points coming off the highs of the session. Like I said, there's something suggesting, again, from an educational standpoint, this is where one would start looking for a pullback intraday. And again, I was sharing with you why this could be the case. This is the NASDAQ. It's the 4 hourly for the NASDAQ. And these are the futures. So what I want to show you is there is a breakpoint right here of the RSI. This breakpoint is what brings the market lower off the all-time highs right there, about 12,400 for the NASDAQ. And what we're going to do is take that information and extend this line out, something like that. Now, without spending too much time, we can see that this line has been rejection area for the NASDAQ. Here we have uniform activity 2 times above the blue line and back below it. That's a double bottom. Looks like an M. All that activity is uniform action. Let me explain. So the line is like that. We have 2 movements above the line. For somebody who doesn't understand this method, we've gone above it to the line, back above it, and below it. This is what I'm calling double bottom uniform activity rejection. The activity above the line is uniform. Now let me explain why I call it uniformity. Is in essence, and this might be a stretch for some of you, but what this means is because of the uniform action, what I have come to understand is actually this should never have been. The uniform action tells me that this was a fake move, should never have happened. Hope that makes sense. In other words, the RSI wanted to go flat. Now I'm kind of getting off topic, but might help one or two of you guys understand this method. The RSI actually wanted to go flat, but since the market doesn't like to be flat, it generated some fake behavior. So this area here should never have happened. We know that to be true because this price level is never held. And once the market broke down, we haven't been back to those levels. It also did the same thing again here, the same identical thing. So this price level was fake. We break below that level, which is this movement, I believe was yesterday. And now here we are potentially around this blue line. So the more we roll over around here, the more the market is poised for a move lower. And should the market move above the blue line and stay above it, that actually means this market is about to explode to the upside. Now, like I said, good areas of reversal tend to have confirmation coming from other points of view, other points of view. And I can argue that there's a line connecting RSI highs. If I draw it this way, you can see the blue line, the red line is exactly where the Nasdaq is trading. So either we're going to get movement above this line to further increase the daily gains, or we stall around and we see the market roll over. One of these two scenarios is gonna play out. And then of course we bring back the previous line, which is the uniformity resistance line. If these two lines become resistance, market goes down from here. If the market can move above this level, we see market moving higher. Here's a quote of the market. Again, the RSI is a very useful tool if you look at it correctly and understand how to use simple, powerful RSI lines. Eric Muathe, Muathe.com. Love and light, light and love. Namaste.